As a forex trader, have you ever found yourself analyzing correlating currencies moving in the same direction, and you're having a hard time trying to figure out which of the currency pair within the correlation is going to have a higher probability of moving in your direction, especially when you're not willing to expose your account to so much risk, thereby trading with both currencies? Here's one of the easiest ways to select between the two correlating currencies, which of them is going to have higher probability of moving in your direction, and that's through interest rates. Now, what are interest rates? These are interest placed on borrowings, and these interest rates are being set by central bank of a country. Every country has its own interest rates, and depending on how high or low your interest rates are, that is the same rate at which you're going to attract foreign investors. Now, a country that has a very high interest rates tends to attract more foreign investors and also increases the demand for that country's currency. And whenever the demand of a country's currency increases, it also increases the value of that currency, therefore making that country's currency very strong against some other country's currency with lower interest rates. And as a forex trader, you're always looking to pair strong currencies against the weaker currencies. That will give you a higher probability of price moving in your direction. Now, let's take for example GBP USD and also Euro USD. Prior to the opening of London session, they were both correlating. While I was making my analysis, GBP USD was giving nice looking structures with price sweeping Asian high and taking out previous daily high. Then we'll have a break of structure at the opening of London session. We had a change of character at the opening of London session. Same structure, same nice looking structures with Euro USD at the opening of London session. We'll have price sweeping Asian high. Then we'll have a change of character, same nice looking structures. They were both correlating. But however, fundamentally, the pound and the US dollar are having almost the same interest rates, where the pound is 5.25 and the US dollar's interest rate is 5.50. Here you could clearly see that it was a struggle during the London session and into the New York session. US dollar had a little bit of a struggle pushing price downwards against the pound, compared to the Euro USD, where the Euro USD has a lower interest rate against the US dollar, where the Euro USD interest rate is around 4.25 and the pound and the US dollar is around 5.50. So you could see the difference in the interest rate, and that is why we had a smooth sell-off around for the Euro USD against the struggle for the GBP USD, And if you had to go with if you had to choose the GBP USD, after we had this change of character, and then we had price giving us our entry around here, and putting our short position too. From this area, you would have seen that okay, price would have taken you out before moving bearish, right? Price would have taken you out before moving bearish, compared to the Euro USD, where we had that smooth sell-off after price, change character, and then we'll have a push-up, price reacting from a breaker block, and then we'll have a retracement into this other block, then we'll have this smooth sell-off without much struggle, right? So now if you're trading any correlating assets and you find yourself having to choose between any of them, all you need to do is pick the one with the highest interest rates against the one with the lowest interest rates, because that is going to give you an edge and increase your probability of price going in your direction. Just as how we saw the Euro USD and the GBP USD, you could see the smooth sell-off between the Euro USD and then the struggle between the GBP USD after taking out the first set of traders who tried selling GBP USD based on their confirmation, based on their confluences. You could see price giving a nice looking entries, but then you could see the liquidity sweep and price pushing above this entry, this 5-minute entry, and coming down. You could see the struggle without moving much. These are about 19 to 18 pips, while the Euro USD gave a sweet 30 to 35 pips without any struggle. You could see the sweet sell-off without any struggle, and this is because of the difference in the interest rate now. But that's why I went for the Euro USD against the GBP USD, because I know fully well that the Euro USD has a lower interest rate because they just cut down on their interest rates early this month, and while the US dollar has a high interest rate, and they are still keeping a hold on their interest rates at that level. So you might have an easy sell off on the Euro USD compared to the selling of the GBP USD.